Good morning and welcome to the Killik and Co Market Update. It's been a good week for US equities after some comments from the Federal Reserve that suggested that interest rates won't go up as quickly from now on. Here's exactly what was said by Jerome Powell, the chairman of the Federal Reserve. He said it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Markets are now expecting that at the meeting this month, the Federal Reserve will put interest rates up by 0.5% instead of 0.75%. Lower interest rates tend to be good for equities, and therefore we've seen a good run in the S&P 500. Here we've got the 2-year chart for the S&P 500. The index itself is shown in the blue, and you can see there's been a decent rise over the last month. The pink line shows the 50-day moving average, and the green line shows the 200-day moving average. The 200-day moving average is quite a widely watched technical indicator. When a share price or an index price crosses through its own 200-day moving average in an upwards direction, that is generally taken as a positive signal. And you can see that's happened this week with the S&P 500. What the chartists or the technical analysts will be looking for now is what we call a golden cross. And that would be when the 50-day moving average crosses through the 200-day moving average, i.e. on this chart, the pink line crossing through the green line. A country's currency tends to strengthen when its interest rate is rising. So now that interest rates in the US are expected to go up more slowly, that has put downward pressure on the dollar, and we've seen it weakening against the pound. Here's the dollar sterling rate over the last 2 years, and you can see it's been quite a roller coaster. It's been up over 140 and down to 1.03. And when it was down at 103, it was quite difficult for UK-based investors to buy dollar stocks because the currency made them relatively expensive. Now the rate is 123, and that makes dollar stocks much more attractive to investors who are based in the UK. Here at Killik, we are global investors and we have lots of overseas stocks on our buy list, so please do give us a call to talk about potentially buying some of these now that the exchange rate looks a bit more attractive. And finally, the details of the latest FTSE 100 quarterly reshuffle have been confirmed. We've got 3 companies being promoted into the index and 3 companies being relegated out of it. Joining the index, we've got investment company Aberdeen, which will have been helped by the rise in stock markets that we've seen this month. We've got Beazley, which is a specialist insurer, which has done well from focusing on cybersecurity. We've then got Weir Group, which is an engineering company that works with large mining and oil companies, and that's done well due to an increase in copper production in South America and also an increase in activity in the Canadian oil sands. Dropping out of the index, we've got Dechra Pharmaceuticals, which focuses on the veterinary markets, and that did really well during the pandemic when everyone was buying new pets, but the shares have fallen very heavily this year. We've got Harbour Energy, which has been negatively impacted by the UK's windfall tax, and finally Intermediate Capital Group, which is an asset manager with links to private equity, whose shares have nearly halved this year so far. Moving on to have a look at next week, it's looking pretty quiet on the calendar. We've only got results out from Costco. That's it from us. Enjoy the weekend, and we'll see you next Friday.